is Mark Espy with MarketTamer.com, also known as the Robinhood Trader. Must remind everybody that everything we speak about here is for educational purposes only. Please do your own due diligence. We're looking at the comp Q, and just to recap a little bit, we came out of this channel, broke down very smartly out of this, no question about it, a definite breakdown out of that channel, and then continued to trade down. The flash crash day was on May 6th. Just a crazy day. In fact, the last couple of weeks have been just nuts. And then we had recovery up to the bottom of the candle from the breakdown day, and then we continued to trade down. We retraced from that point and came back down, and then today we actually gapped down today. And this morning when I was looking at it, it was a gap down, and I thought it was going to be just a super ugly day, but it made quite a stand at this level and traded up. And in fact, the last half hour of the day was really quite impressive, and it pushed the index back up and closed about halfway up the prior day's candle and closed right at or just above the 200 simple moving average, which is quite bullish. Looking at where we're going to go from here, though, is another task altogether. We have a very wide channel here. I suspect that this type of volatility cannot continue at the level that it currently is. We're seeing the VIX come back, the VXN coming back and reducing as well. And I'm hoping to see more definitive moves in probably a sort of a sideways range until it decides what it wants to do. I'm going to be very much surprised if it breaks back up above 24.25, which is the top of the channel, or if it breaks down below the low that was actually put in today at 21.66. We see right here there's a level of that we need to pay attention to right at this shelf, which is about 2,400, just below that. And then this area right here at 23.25 from this prior swing high in early 2010, and of course the channel that I just spoke about back here needs to be paid attention to. The high that was put in on the 26th of April was actually at 25.35, and we came all the way back down here, and then where we're currently right now is at 22.29, which represents a 12% pullback, which is certainly more egregious than what we saw in the Dow, which is about 9.5. We have the MACD that's not really telling me anything other than wanting to continue to be bearish, and we have the stochastics, which looks like it wants to get into the oversold area but has not yet done so. So I'm looking at trading in this channel, and then more definitive and narrower range moves going forward, and narrowing the channel as well with a reduction in volatility. I just don't feel that this can continue at the level that it certainly is continuing right now. But with that in mind, you need to be careful, be nimble. I would suggest that you trade hedged and pay attention to the market, because the market has been so crazy here. It's hurt a lot of people, so you need to be careful and don't get too wild out there. Just be prudent with your trading. And I look forward to talking to you next week, and hope you have a good week of trading.